Good morning. It's 9 a.m. in Hong Kong, 10 a.m. over in Tokyo. Markets in Greater China are shut for the Lunar New Year, but as you can see, we're still here. You're watching the China Show. I'm David Ingles with Rebecca Choong Wilkins.
Our top stories today. Markets brace for Trump's tariffs, with the president saying Canada and Mexico will be hit on Saturday, and China is still in his sights. Meanwhile, Nvidia supplier SK Hynix slumping on concerns about China's AI advances.
And speaking of AI, U.S. officials are said to be investigating whether DeepSeek got around U.S. curbs on Nvidia chip sales by buying them through third parties in Singapore.
Also ahead, Samsung's semiconductor unit posts disappointing profits as it struggles to catch up in the AI chip market.
Plus, Apple is jumping in after-hours trade. That's after quarterly revenue setting a record, but China's sales are even weaker than initially feared. Good morning, and yeah, we're here quite immediately. Happy Friday. A trading session ahead of the weekend. First show, by the way, and welcome, and thanks for joining us. First show of the year of the snake. A couple of markets, as you can see, bottom of your screens, are still shut. That said, there's still a proxy for China. 0.4 of 1% is a contract over in Singapore. The move we're seeing in Nasdaq futures down to what we're seeing in the after-hours trade from the likes of Meta, for example. We talked about Apple. We'll get to that certainly in a moment. One market that is reopening today that really has a lot of the major market themes playing through this market is South Korea. As you can see, we're reopening after being shut for about a week. There's the tariff and the won story. There's an earnings story with Samsung. There's the global chip sell-off expressed, as you can see, in the likes of SK Hynix. We'll get to all of these in just a moment here. There's also the Nvidia story and Samsung getting the nod, of course, for some of its chips that go into some of Nvidia's AI processors that it then sells to China, which takes us into the Singapore story, which we'll get to in a moment. Speaking of tariffs, a couple of things to watch here as far as the FX space is concerned. So we're coming off some of the extremes in the last few hours or so, although certainly two levels to watch in the Canadian dollar. We're extremely close to that. One takes us back to 2020, and the latter one takes you back to 2016. Above those levels, we're back to a loonie that hasn't traded at 147, going back to 2003, thereabouts. Right, speaking of extreme levels, gold hitting a record overnight. We're looking at that. Gold futures, iron ore, by the way, hasn't traded above 106 for several months right now. So that's really leading to, I think, both of these things leading to a rally we're seeing in the likes of some of these mining stocks in Australia. Bitcoin is just down a little bit. That's close to about 105, 106, which is, of course, the all-time high for that. But we can get to that later. But yeah, but certainly this is it's a geopolitical story that has FX ramifications and also, as it pertains to AI, we're still seeing it play out, Rebecca, across these markets.
Yeah, big week for AI, really through end of last week into this week.
Yeah.
Officials from the FBI and the Trump administration are said to be investigating whether Chinese AI startup DeepSeek got around U.S. export controls to acquire advanced Nvidia chips, possibly through third parties in Singapore. Our chief North Asia correspondent, Stephen Engel, joins us now. Just tell us what we know so far, Steve.
Well, we know that DeepSeek has caused deep ramifications across the markets and a lot of scrutiny, of course, of the supply chain and whether and the efficacy, of course, of those Biden-era export controls on the most advanced chips. So we did hear earlier this week that OpenAI and Microsoft had launched their own investigation into whether some of that OpenAI data had been unauthorized or DeepSeek or parties connected to DeepSeek had gained access to that data in an unauthorized manner. Now we're hearing from sources that the FBI, as you rightfully said, Rebecca, and the White House team are investigating whether DeepSeek bought advanced Nvidia chips possibly through a middleman, a third party in Singapore, which has not necessarily been named. And we have to kind of decipher which chips are actually in question here, because we know a number of them, the H100, the advanced chips for AI, as well as the H800, which Nvidia had developed to sell to China after the earlier bans, but then it was subsequently banned as well. Now, DeepSeek hasn't necessarily indicated specifically which chips they have been using, but some of the engineers have indicated the H800 was one of those, but that has been banned, so that would be in violation of those export controls. There's also the H20, which is a less capable chip from Nvidia, which Nvidia rolled out to sell to China after the second ban, right? So again, we're going to have to kind of dig deeper into DeepSeek to see which chips are in question and which ones potentially have been in violation of those export bans, and who is that third party potentially, allegedly, in Singapore. So lots to unpack here.
Well, it highlights the containment efforts yet again, and the story of DeepSeek just highlights the fact, I think the efficacy you and I were talking about this last week, and whether the U.S. needs to even, do they even need to tighten the screws even further and maybe force China to adapt and come up with a better. Where's the conversation now as far as the Commerce pick is concerned?
The efficacy of these export controls and how to enforce it, obviously, especially at a time as well, a change of administration and a complete change of tack from the Biden administration to the Trump administration. And keep in mind, the Trump administration officials, I'm not saying that all these workarounds, if you will want to call them, these alleged workarounds, happened in the opening days of the Trump administration, but the Trump administration doesn't have all their pieces in place yet. The Commerce pick, Howard Lutnick, has not been put in place just yet. So he's relying on Peter Navarro, Stephen Miller, and these other individuals to kind of craft that tariff narrative. That's why perhaps we haven't gotten the full story on tariffs yet, but as well on these efficacy of the export controls are being looked at not by a full team. Howard Lutnick, I mentioned him. He is fully in support of, tough tariffs on China. He, yesterday as well, at his confirmation hearing, you're seeing him right there, essentially suggested that the parties associated with DeepSeek have evaded U.S. export controls. I'll read you a quote from that Senate confirmation hearing. He says, NVIDIA chips, which they bought tons of, they, I'm assuming, parties connected to DeepSeek, and they found their ways around the export controls, he says, drive their DeepSeek model. It's got to end, he says. I'm going to be very strong on that. So you can see that the Trump administration is taking this quite seriously.
On the one hand, export controls, one of the big tools, of course, that the Trump administration is thinking about leveraging. On the other, of course, as you mentioned, tariffs. Now, we have Canada, Mexico, a little bit of clarity over that coming through tonight. We're seeing it reflected in markets. But China still is a bit of a question mark here. What do we know, if anything, more?
Well, we know that, at least from the mouth of Donald Trump, that those tariffs on Canada and Mexico are going to take effect tomorrow, Saturday, February 1st. Will China also? He was asked that in the White House. Let's hear his response.
With China, I'm also thinking about something because they're sending fentanyl into our country, and because of that, they're causing us hundreds of thousands of deaths. So China is going to end up paying a tariff also for that, and we're in the process of doing that. Mr. President, we'll make that determination what it's going to be.
So they're still figuring it out. He's threatened 10% tariffs on Chinese products because of the border issues. He really highlights, obviously, fentanyl. And again, this is potentially still negotiable. But again, we still don't have clarity as the agencies of the Trump administration. I told you they're a bit shorthanded right now. Scott Bessent, the Treasury Secretary, probably more focused on tax reform packages than the tariffs issue. We haven't gotten the complete confirmation yet on Howard Lutnick as Commerce Secretary. So I guess they're still kind of figuring out whether those 60% tariffs on top of the 10% on the border issues are still going to be implemented. Are they going to be staggered? Are they going to be all at once? Are they going to be negotiated down? We still don't know.
Yeah, we're still trying to figure out what risk premium to attach to these things. Stephen Engel, fantastic reporting. You're our chief North Asia correspondent. Steve was just mentioning they were trying to figure things out, and markets are really just caught in between just headlines right now. As we were talking, we showed you the Canadian currency extremely close to fresh two-decade lows. Markets are getting ahead of this by driving up really the cost of hedging here. 1 week expected vol under Loonie is now at a 5-year high. This underscores the very point that the markets will lean in favor of the U.S. dollar, and the Bloomberg Dollar Index is actually now on track for a fifth day of gains as we head into the weekend. Peter Tchir, head of macro strategy at Academy Securities, joins us right now to talk to students. Peter, good morning from Hong Kong.
Good morning.
Again, markets are just trying to figure stuff out. You know, how much risk premium do we attach or remove from these exchange rates right now? What is your advice? How do I approach something that we don't know?
You know, I agree. It's very tricky. I think, if you look at Canada, I think he's simplifying the issue somewhat because many of the products are designed to be sent back and forth across the border, especially in the auto industry. So I think laying blanket tariffs on is going to be tricky. But when I look at what's going on in China, two things are really important to us. So I work with Academy Securities, and we have a team of geopolitical intelligence group, we call them. It's 30 retired generals and admirals, and many of whom have worked in Trump and various administrations. And what we have been hearing is that he did not pay a lot of attention to national security while he was on the campaign trail, nor did he once he was elected. But now that he's in office, him and all the people he's trying to get put into roles are being, inundated with national security information. So I think that's going to make him harder on China than he was before. And the other thing that we don't talk about enough, and I think is important, Trump likes wins, and he does feel like Xi cheated him a little bit the first time around. Xi had promised to buy a lot of agricultural products from the U.S. in the first round of tariffs. China never really followed through on that. So I think this is going to get worse before it gets better on the tariff front.
Peter, it's Rebecca here. Tell me, why is Trump waiting on China tariffs? We just had our correspondent, Stephen Engel, talking about the Trump administration still needing to put in some of these key figures in place. Is it just a case of the fact that we don't have the full team? What is actually the playbook here from Trump's point of view?
So I think partly he wasn't getting completely read in on the national security issues. I don't think he was as focused on chips maybe as he should have been. He kind of let TikTok get an extension, which surprised many, given that that was a bipartisan decision to force TikTok to sell their U.S. stake, to a U.S. owner. So he's been flip-flopping a little bit. I also think he realized what was being told this time around about the complexities. You go back again, some of the tariffs they put on, China was very quickly able to work around them by setting up factories in Mexico and elsewhere. So I do think this time around, he's not got his team fully in place, but it's a much bigger team, much better organized. So I actually do believe that they are thinking this through a little bit better. But in the end, it's going to be very national security focused. It's going to be about chips. It's going to be about AI and trying not to allow China to keep up, pass, or surpass the U.S. in those fields.
Yeah, well, Peter, let me just jump off that point. Perfect segue, really. I mean, if he wasn't paying attention to chips just as recently, let's say 2 weeks ago, there's a DeepSeek reason to do it right now, isn't there? And I'm wondering, do you think he tightens the screws even further on China? And do you think it's going to work? That's a separate question, too.
I think Trump, when I look at how Trump works, he likes wins. This is clearly in the media. It's gaining attention. It would be something that I think there's a decent amount of support for, so he might do something. I think it's going to be difficult to win. You can rent compute. You can do lots of things to work around. Whether they got chips from somewhere else is being alleged or not, I don't know. But what we've been advising, our clients, and from a national security standpoint is, the ability to make chips smaller and smaller does depend to a large degree on ASML technology, but you can make very thin chips with older technologies. It's just very inefficient, but China has the power and the might to get through that. So I think that's how they've been able to manufacture 7-nanometer chips. And the other thing, when we look at Moore's law, the ability for chips to double in speed every 2 years or compute power, what we're hearing from a lot of people is the shrinking of chip is becoming less important than how they're packaged into a semiconductor. And that technology is easier for China to adapt and be competitive with. So I think this is a real competitive threat. And to some degree, necessity is the mother of invention, as we say. So maybe if China was being restricted, they did find workarounds that the U.S. didn't have to. So I think this is going to really up the competition, and it's going to create a lot of friction globally between the U.S. and China.
Peter, to your point about that global competition when it comes to the frontier of AI, it's not just a hardware question. It's not just a question of access to these chips. DeepSeek has also proved it's a software issue. We have executives, including from OpenAI and others, claiming that DeepSeek has essentially been predominantly trained off of Western models, including, OpenAI says, its own model. That's evident when you, for example, mostly ask DeepSeek what it's modeled on. it tends to answer ChatGPT, for instance. So I want to ask this question about how it is that geopolitics might enter the conversation when it comes to protecting IP. Are we going to see this conversation move away from just restricting chips to trying to restrict the technology and access itself when it comes to these newer open source models?
Yeah, and I'll take a step back. I think it fits into what you're talking about, though. 2024, we started with the view that we are seeing a transition from made in China to made by China. And what we meant by that is China is no longer just content manufacturing other people's products. They want to manufacture their own goods and export them. I think BRICS is never going to really be a political construct, but is a great way for China to create almost a barter type system where they can sell their products. So I think the US is going to be very uncomfortable using Chinese technology, but where in the rest of the world are they going to adopt these things? Where can DeepSeek now become a competitor to ChatGPT? And I think the BRICS, and in general, what we've been calling the autocratic resource-rich nations. So those are the nations that tend to sell a lot of raw resources and commodities into China. I think that's where China is trying to target the selling of their goods and brands. And there's no reason that AI can't be another thing that they try and target. So I think this is going to be a global competition. And as you say, it's real. It's moving beyond just the chips. It's into the software. It's into access. And it's going to be a tricky thing for the U.S. to battle, I think.
Peter, Chinese markets have been largely shut this week, so we haven't really seen investors express fully how they feel about these stories. Let me point out that Alibaba, where you are in New York, is up 16% this week. Does this underscore the case, I guess, to look into potential discounts in the Chinese market or Chinese assets, Peter?
Yeah, and we've actually liked KWEB and FXI, so two ETFs that you can buy here in the U.S. I think they've been very out of favor. I do think there's going to be all this friction. I think it's difficult. But having said that, I do think these Chinese brands are developing some global traction. You've seen it with BYD in Germany. I think you're going to see that story grow. I think DeepSeek is another yet example where China is going to try and broaden where they're selling into, and that will be very good for Chinese companies. I do think there's a chance that Trump wants to negotiate something to get a win with Xi, which again lets China maybe get through the current economic slump. I do really think Xi needs to come through with a more forceful fiscal stimulus. But if they get that, I think Chinese stocks are actually poised for a really nice return. I think longer term, there's all sorts of issues. There's all this competition. But from a trader standpoint, I think they're well positioned to do very well on the back of all these developments and on the reopening, especially if Xi comes up with some sort of true fiscal stimulus, which so far he's been reluctant to do.
Peter, in 10 seconds or so, I almost forgot we had a Fed meeting this week. Do I even bother with the Fed at this point?
No, I think that was the third most or least important thing of the week, right? It's DeepSeek, what's going on in cheap AI, which is actually helping profit all sorts of companies, right? If AI is really cheaper, it's going to broaden out the scope. And then we're going through the Mag 7 earnings. We've had good reactions to those so far. I think we move on, and we'll be really curious to see how China reopens, what they do, and if we come to some sort of medium sort of term deal with tariffs, again, I think it's off to the races for markets for a little while.
Peter Tchir, Head of Macro Strategy at Academy Securities there. And a reminder that markets in Greater China are shut for the Lunar New Year. This is The China Show.
Welcome back. So Apple out with earnings, also giving out a fairly reassuring forecast and guidance here for the current quarter, helping boost shares in the after-hours trade. That's after when you look at the actual numbers coming in maybe slightly below expectations here. Apple CEO Tim Cook on the earnings call. Have a look.
If you look at our Greater China revenue for the quarter, we were down 11% year over year. And over half of the decline that we experienced was driven by change in channel inventory.
And Mark Gurman is with us, our Bloomberg tech reporter. Mark, your takeaways here.
Yeah, so the overall top-line number, overall revenue, excellent. 4% year-over-year growth may not sound like much, but when you get to those large numbers, they talk about the law of large numbers. Any growth, a beat to Wall Street expectations is pretty good. But when you get into the actual numbers, there's some weakness. iPhone fell on an annual basis, missed Wall Street expectations. Clearly, Apple's AI efforts are still very nascent, very weak. They're not selling the phone to the point that Apple thought that it would sell the phone to. You saw some positivity on the Mac and iPad, but then you also saw some weakness on the wearables, home, and accessories category. They had a little bit of a tough compare there because of the Apple Watch. But the big news is the 11% annual decline in China. Apple tried to explain that away as an inventory issue, but they seem to always have an answer to analysts about why their sales are falling in China. They're down $7 billion from where they were this exact quarter just 3 years ago. So they're not in a great place in China. Competition is heating up there. Huawei and Xiaomi are excelling there. The artificial intelligence efforts of the local companies are excelling there. So if I'm Apple, I'm very worried about what's going on in China. The silver lining is that the other emerging markets seem to be doing well. They talked about doing well in South Asia. They talked about doing well in Japan. They talked about doing well, particularly in India and the Middle East and parts of Latin America. So from an emerging market standpoint, there is some positivity as well.
Mark, DeepSeek, of course, continuing to dominate conversations here in Asia and elsewhere. I just want to pick up on your point about AI. This issue of Apple being slow on AI, how much is it actually hampering AI? To what extent does DeepSeek add an urgency and a fire sort of under the belly there?
Okay. DeepSeek is so interesting in the context of Apple because they're using a similar underlying technology and ethos for AI in terms of light applications running on the device itself. But they're knocking it out of the park in comparison to what Apple is doing. And so they've basically followed the Apple playbook, but have beat them completely. A much smaller company with far fewer resources. And so at the same time as being scary, it's also positive. It's scary because Apple is being left in the wind by this much smaller competitor that no one heard of until a week ago. But they've also proven the Apple business model, which means that there is some optimism that Apple can get it right. And so it's scary and exciting at the same time for them.
Scary and exciting. OK, Bloomberg technology reporter Mark Gurman there. And coming up later on the show, we'll continue that conversation on Apple's earnings and the DeepSeek impact on big tech with Beth Kindig, lead tech analyst of IO Fund. There's plenty more ahead. Stay with us. This is Bloomberg.
Right, welcome back. A couple of sectors we're tracking within, of course, the South Korean markets that are reopening today after being shut for a few days. There's an earnings story in Samsung. Obviously, the DeepSeek sell-off is playing out for the very first time in Seoul, and certainly your iteration of that is SK Hynix, down about 8%. The Apple suppliers also in focus. We talked about Apple earnings coming through, so you have a lot of companies, of course, tied to the guidance out of the company. A lot of them are in Japan. Some of them are actually also in Taiwan and other parts, mainland China and here in Hong Kong, which do remain shut, of course, those three markets. And very, very quickly, bright spot across these markets is, look at gold, you look at iron ore, for example, and you look at some of the big mining stocks over in Australia that are actually up. The ASX Materials Index is up about 1%. So we're looking at that, 1670 in that level. More on that in a moment. Philippine markets are up online in about 3 minutes. This is Bloomberg.
Welcome back. You're watching the China Show. Greater China markets on holiday still today for the Lunar New Year. But our first show, full show back in the year of the wooden stake. And also my first show back after coming back from Davos, where really conversations revolved around DeepSeek, competition with China, and how to protect US IP and IP of its allies. Still really a dominating conversation here as we open trading in some Asian markets. And here's a look at how Hong Kong, the vista over Hong Kong last night. This is the Hong Kong's firework display to mark in the Lunar New Year. A very happy New Year. Lots of surprises with AI, DeepSeek coming in to surprise markets. Waiting to see, of course, how Chinese markets recalibrate in response to that. Sticking on that theme, DeepSeek's latest AI chatbot has challenged established assumptions about the costs of developing AI technology. We saw a lot of that conversation, a lot of that debate really dominate in Davos, and quite a surprise from previous years where the focus has more been on technological advancements, sort of steering a little bit away from geopolitics. Now, Bloomberg Originals has taken a much closer look at the development and the emergence of DeepSeek, which of course has taken so many by surprise, perhaps, but not those who really have focused on this industry and focused on some of the advancements that China has been making over the past year or so. Let's take a closer look.
January 27th, 2025 may go down in history as DeepSeek Day.
DeepSeek shaking up global tech.
Nvidia losing nearly $600 billion in market cap today alone.
In a few hours, the company broke its own record for the biggest single-day loss of market value in history. A handful of other US chip stocks, many trading at 30 times earnings or more, plummeted as well. They dragged down the S&P 500 and the Nasdaq 100. Even as companies pared some losses later in the week, DeepSeek had sent a message.
US tech giants have really claimed supremacy in the AI race. DeepSeek is really making them question that narrative.
The release of DeepSeek AI from a Chinese company should be a wake-up call.
DeepSeek revealed that it was able to outperform the leading US AI companies at only a fraction of the cost.
The entire stock market has been really hinging on this AI supply chain. And what DeepSeek threw into question is whether or not that supply chain really needs to be built out as much as the companies have projected.
So what do we know about how this nascent app rocked global markets? And is it the pin that will burst what many fear is a dangerous AI bubble? DeepSeek makes an app similar to ChatGPT or Claude. It'll write code, answer questions, or script an empathetic breakup text. But it distinguishes itself by articulating its reasoning before responding to a prompt. And what's extraordinary is its apparent quality and low cost, and of course its seeming appearance out of nowhere.
DeepSeek is a Chinese AI startup that was formed in 2023 and spun out of a hedge fund.
It was the product of 40-year-old entrepreneur Liang Wenfeng. He looks like this, and only this actually, because it's one of the only shots anybody has of him. While Western tech leaders are extraordinarily good at self-promotion,
He's kind of stayed out of the spotlight.
There's not a great deal known about him. He certainly wasn't a well-known name in Chinese tech.
But he's a well-known quantity in finance, especially in China.
Seems like he studied electrical engineering and computer vision, which is a very interesting field of AI specifically.
So to the AI world, DeepSeek wasn't entirely new, but in November, it released a preview of its R1 model. And later that year, we could see that it was actually performing really well against some benchmarks versus some of the more well-known AI models, including OpenAI's.
In fact, it ranks among the top performers on a UC Berkeley-affiliated leaderboard called Chatbot Arena. In January, DeepSeek hit the big time when its R1 model was made available in an app.
It quickly surged to the top of the App Store, and it surpassed OpenAI's ChatGPT.
The tech industry has been really impressed by DeepSeek.
These are AI models that can not just produce text, but can actually develop mathematics skills, coding, and some advanced reasoning that we haven't seen from computers in the past.
Answering questions the way, a human might think through a question.
Just don't ask it about Chinese politics. Its reasoning is aligned with that of Beijing's censors, meaning some questions are politely sidestepped. But it's also open source. Developers can inspect the code, modify it, and run it on their own servers, even for commercial use. US AI startup Perplexity has already announced DeepSeek can be used uncensored on its platform.
But what really sent investors over the edge is that DeepSeek revealed it was able to build this model and train it at just a fraction of the cost. Anthropic CEO Dario Amodei predicted that it will eventually cost $100 billion to train models compared to $100 million today.
DeepSeek. We're told this happened with $6 million in funding. Is that possible? Is that true?
They said this one individual training run was $6 million.
The fact that DeepSeek was able to do this really raises the question, what have these companies been spending billions of dollars on?
AI is notoriously capital intensive. Since 2017, total spending on chips and data centers by some of the major US players has shot up. Now, let's see the breakdown. Microsoft, Amazon, Oracle, Google, and Meta, together, they're forecast to spend more than $250 billion on AI infrastructure this year alone. And that's one big reason Nvidia's investors got spooked. It makes a lot of that stuff. DeepSeek's low-cost, high-performance product suggested packing expensive data centers full of power-hungry semiconductors might not be as necessary as previously thought. It's also why energy companies and equipment manufacturers' share prices sank in the wake of DeepSeek's emergence too. AI devours energy. This is Microsoft and Google's total energy consumption. You can see the upward trend, and a lot of that's because of AI, which would have been good news for those who generate it. So how was DeepSeek even able to become so proficient?
Washington, for a number of years now, has been restricting China's access to cutting-edge chips, which they thought would hold it back significantly in the AI sector.
The Biden administration moved to curb sales of these high-tech chips.
The future of the chip industry is going to be made in America.
This meant that Nvidia and other chip makers couldn't sell to Chinese companies. So DeepSeek got creative. It found a way to more efficiently build and train a model without needing so many Nvidia GPUs.
One thing that they've been able to do is really get more power out of sort of older computing chips, older Nvidia products.
It's something game developers have practiced for years, because the components of a console, say the old PlayStation 3, never changed. Game makers had to figure out how to eke performance out of them, so titles released at the end of a console's life often had better graphics than those available at the start. Uncharted versus The Last of Us, for example. Liang Wenfeng probably knew this.
Before the US chip curbs sort of came into play, he started sort of hoarding these Nvidia older chips, older graphics processing units.
It's not the first time a Chinese company managed to innovate underneath US-led sanctions, though.
About a year ago, Huawei stunned the tech industry by unveiling a phone that was powered by semiconductors that were more advanced than US officials previously thought possible, especially after they had instituted export controls. This DeepSeek release and this huge reaction that it sparked could raise alarm bells in Washington in a similar way.
There are a lot of people now in Silicon Valley trying to decipher how exactly DeepSeek was able to build this model, whether it used technology from other companies, and whether it used more chips than it's let on.
DeepSeek hasn't commented on industry speculation, but Microsoft launched an investigation to find out if it's accurate.
I don't think there's a clear answer to that yet, but I do think they have shown, in the research that DeepSeek has published, that they have been able to, come up with their own innovations here, and they have been able to really be efficient with the technology that they do have.
DeepSeek's focus on efficiency rather than funding meant it could engineer itself into a competitive position, even if it was standing on the shoulders of giants. And despite the risk its achievements are thought by investors to pose, President Trump and American tech bosses have been pretty complimentary of the Chinese startup.
Competition is great for the U.S., and DeepSeek is competition, no doubt about it. I'm hearing all of the tech titans speak of it glowingly.
To see the DeepSeek new model, it's super impressive.
This is a bit of a wake-up call for the AI industry.
I think that the U.S. has spent a long time sort of underestimating China. China's tech sector is actually very capable of innovating and creating these very powerful and very advanced products. And I think that Silicon Valley's, presumed lead that they have over China, I don't think they should take that for granted.
And for Bloomberg clients, you can watch that reports on your terminal, also Bloomberg.com, and it'll also be available on the Bloomberg Originals YouTube channel shortly. Right, okay, just some breaking news right now on the tariff front. So Donald Trump's reiterated a few things in the last 24 hours. We talked about Canada and Mexico. This time, taking a page back from about 6 weeks ago, he's now reiterating that threat of 100% tariffs if BRICS will be seeking or advancing these ideas of replacing the U.S. dollar as the global reserve. That's on a Truth Social post that we just saw, of course.
Yeah, right. I mean, I guess the idea really, though, of an alternative BRICS-led currency hasn't really had much traction. It was initially a sort of Russian-focused idea, but most BRICS countries have sort of said quite openly they're not necessarily interested in a new alternative. The more worrying line here might be for China. Now, he hasn't named China by name, but he said, nor back any other currency to replace the mighty US dollar. Now, the yuan, of course, is the obvious target there. And it's a bit of a moving target. Hard to know what it might mean or look like to Donald Trump if the Chinese were to be, say, using the yuan as a replacement. We know that, even countries that are US allies, for example, have started using the yuan to do big trade deals, or what I say, moderate trade deals. Yep. BRICS nations have been much more willing to engage in kind of using the yuan for bigger deals. But it's still sort of something that is slightly in a grey area. What does it mean to really be an alternative?
Right. And, there are three levels to your point, right? We have seen wider adoption of the currency on trade, investment functions, and then, of course, the global reserve is a different sort of story altogether. And how does this dovetail then into, if China's part of this, dovetail into the other aspects of the China-specific tariff threats that he's been put forward, whether that's on the fentanyl side of things, of course, and other parts of the conversation here. But yeah,
does it become part of that equation when they're thinking about, whatever that China deal might be that we're so keenly waiting for?
There'll be a lot of people around that table, just how multifaceted this negotiations will be with China. And it gets, of course, the dollar's actually losing a bit of steam on the back of those headlines coming through. Right, that's a dollar story. There's also a lot of these earnings coming through out of South Korea here today.
Yeah, I mean, talking about that multifaceted area, we've also been talking a lot about AI, the competition between China and the US when it comes to AI. Samsung's chip division, I should say, reported a smaller than expected profit as it fights to narrow the lead of its rival SK Hynix in AI. Bloomberg's Sam Kim joins us from Seoul. Tell us your key takeaways from earnings, please.
Hi. So the earnings we received today are smaller than expected by the analysts that we spoke to before the earnings report. And the Samsung shares are dropping as much as 3% today. Samsung said that its operating profit amounted to about 2.9 trillion won last quarter, which is equal to about $2.1 billion. That's well below the projection of 4.78 trillion won by the analysts that we surveyed before today. That's also lower than 3.8 trillion won in operating profit that was reported in the third quarter. That kind of shows you that the hit to Samsung's earnings is starting to manifest after it lost its lead to SK Hynix on the memory chip business, on the HBM business. HBM is basically a high broadband, high bandwidth memory that is supplied to companies like Nvidia, which is a very important growth engine for both Samsung and SK Hynix. So we're seeing some of the demand for Samsung chips weakening, including the ones that are considered conventional. And Samsung is also not doing very well with the chips in the high-end segment of the business that is supposed to supply to Nvidia. So it's quite concerning for Samsung investors and its executives.
Sam, David here. If I could just pick up on the point you made there on, Samsung missing the initial boat on servicing that Nvidia account. There has been now some reporting around developments there. What do we know about what Samsung was able to get as far as approvals go on that Nvidia chip?
That's right, David. Bloomberg News just this morning reported exclusively that Samsung got a nod, approval from Nvidia to supply what they call HBM3E, which is great news for Samsung because Samsung certainly has been seen as struggling with being able to supply these high-end HBM chips to Nvidia, considering that HBM accounts for about 40% of the earnings for SK
SK Hynix, this is a huge growth engine for memory chip companies, including Samsung. But we should also keep in mind that this HBM3E that Samsung might be supplying to Nvidia going forward is a less advanced version of HBM than the one that Hynix is really pushing to sell to Nvidia in the future. But the news does suggest that Samsung is really trying hard, and it's making some progress in terms of being able to win the backing of Nvidia in terms of being able to supply HBM. So there's some hopes as well here going on, along with the earnings that are somewhat disappointing. So there's a lot to watch out for this year for Samsung.
Sam, thank you. Sam Kim in Seoul for us there. If you are one of our clients, you can catch up on all the interviews and conversations you might have missed here on TV Go. Send us instant messages. You know how to reach us, of course, here on our show. It's in our production team. Any suggestions, any inputs, of course, check it out. TV Go. This is Bloomberg. Right, welcome back. You're watching the China Show. Let's get you an update here on, of course, what took place in Washington, D.C., the big tragedy there. So you have U.S. investigators have now found the black box, the flight recorders from the American Airlines jet that crashed. That's after, of course, this mid-air collision with a U.S. Army Black Hawk helicopter. 67 people were killed in one of the deadliest U.S. air disasters in decades. Danny Lee, our aviation reporter, has been following the story from the get-go. What do we know now about where the investigation is?
Well, I think it's significant that the investigators have found not just the flight data recorder, but the cockpit voice recorder. And these are key pieces of evidence to at least understand from the commercial pilots on board the American Airlines regional jet the kind of conversations they were having with air traffic control in the minutes and even the seconds leading up to the disaster. Were there any warnings given, perhaps, just to ensure that they were navigating this very narrow airway along the Potomac River very safely? And perhaps were they spotting anything untoward as well?
Okay, Danny, thank you so much. Danny Lee there on the latest. We'll get you more on the story, of course, once we do have more information, developing story out of the United States. Danny Lee, thank you so much. Plenty more ahead. This is Bloomberg.
Welcome back. Here are some of the top geopolitical stories we are following. The European Union has resuspended its case against China at the World Trade Organization over allegations of economic coercion targeting Lithuania. The case was first filed in 2022 after Beijing imposed trade restrictions on Lithuania due to its official contact with Taiwan. The EU had suspended the case in 2024, but resumed it last week to prevent the case from lapsing. President Trump has insisted that Egypt and Jordan will take in Palestinians from Gaza, despite both countries rejecting the idea. Meanwhile, Israel has released another 110 Palestinian prisoners under the ceasefire deal after a brief delay over the safety of Israeli hostages. The next hostage prisoner swap is expected to go ahead on Saturday as planned. And FTX co-founder Sam Bankman-Fried's parents are said to be exploring ways to secure a pardon for him from President Trump. Bloomberg has learned that Joseph Bankman and Barbara Fried have had meetings with people in Trump's orbit about clemency for their son, but it's unclear if they've reached out to the White House. The one-time crypto billionaire was sentenced to 25 years in prison for fraud.
All right, let's have a look at markets. A reminder, public service reminder, of course, that you still have mainland China, Hong Kong, Taiwan, and should be opening in the next hour. Vietnam still shut for the Lunar New Year. You'd have some proxies though, and as you can see, if China was trading, we'd probably see a massive rally there. We're up now 2% on A50 futures right now. A lot of that, this sort of DeepSeek conversation, pivoting attention back to China. In case you missed it, to Alibaba, which came out with their own open source on Lunar New Year's Eve, catching the attention there of a lot of people, maybe some out missing out because of what's taking place there. Stock is up 16% this week over in the U.S. Other things, of course, you have South Korea just coming back online, so there is a catch-down element there. to the same themes that I mentioned. Separately, you have the ASX Materials Index. This is in Oz, for example, seeing a lot of upside today. You have a couple of things before I talk about FX. So you have, oh, thank you so much. Iron ore, 106, 107, highest in about 3.5 months. You have gold prices. I'm tracking that. The headline this morning was spot gold hitting a record. Gold futures are continuing to add to that advance. As I speak, we're now trading north of 2,800 on your most active gold contract. Okay, and let's have a look at FX markets, please. Mexican peso, the loonie, and the whipsaw we've seen this hour. In case you missed that, Donald Trump, of course, in a Truth Social post, reiterating his threat for 100% tariffs. On the loonie itself, okay, my screens are going black here on set. There we go. 166, 146.68, and 146.90 are the two levels to watch. Former is 2020. The latter is 2016 levels. Beyond both, we're back to levels last seen 2 decades ago. And dollar-yen at 154 right now. Okay, Korea Zinc has been really a corporate drama story that continues to give, and I think the latest one here coming through is Younghoon filing this complaint against the company to the regulator. Stock is down, of Korea Zinc, down about 1.7%. We have a lot more on the way in the next hour of the China Show, including a deep dive into what DeepSeek means for the broader AI conversation globally. Plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show. Here's a look at the Asia Pacific, the benchmark, as we try and figure out really what is certainly on price, but you do have a lot of markets that are shut, including Hong Kong and mainland China today. So I guess a lot of you are joining us half asleep in bed, at the beach, or maybe still at the bar. Good on you. Asia ex China and the dashboard looking like this. Some markets, of course, are online, coming back online. You have Korea, which is, of course, a very important story. You do have a lot of the this is an intersection really of a lot of the major themes we're tracking today, 1% down. Singapore is interesting too. We're up 1.8%, fourth tile from the left, first row on your screens. And within that specific market, flip the boards, A50 futures. So if China was trading, we would see a massive rally there, up 2.1% on that contract over in Singapore. Yeah, let's put all these top stories together for you. Bloomberg has learned that the U.S., speaking of Singapore, is investigating whether DeepSeek got their Nvidia supply through Singapore, getting around some U.S. restrictions. Stephen Engel, our Chief North Asia correspondent, and Mark Cranfield, our MLI strategist, are joining us now to talk us through this. Steve, I'll start with you. So what do we know specifically about this, this workaround?
Yeah, the alleged workaround, yes. But and this is something, Rebecca and I were just discussing before this about the issue of Singapore has been in question for quite some time, or at least trying to look at the connection. And we'll get to that in just a second. What we're learning now through sources is that the FBI and the White House are investigating whether DeepSeek bought advanced Nvidia chips, whether they were the 800 or the H20. Doesn't necessarily matter, because researchers in the DeepSeek papers have indicated that they used H800 chips for their training, essentially, of their R1, the version 3 of the R1 chat box. So it's not a secret that they had NVIDIA chips, right? It's just how did they get them? How did they go around the export controls? It's almost like herding cats, right? A number of cats are going to get through the corral, right? Because there's a lot of different loopholes that they could potentially go through. Now, they have not commented, by the way. So we'll have to wait to see what DeepSeek has to say. NVIDIA has come out with a statement, and we can bring up that statement. The spokesperson says, the company insists that our partners comply with all applicable laws, and if we receive any information to the contrary, we will act accordingly. So investigation supposedly has been launched, in addition to what Microsoft earlier this week and OpenAI said they've launched a separate investigation. Basically, there's a process called AI distillation. It's where smaller models, AI models, mimic the larger models to learn and to train, right? So this is a common practice within the AI community to build different size models of AI. Well, now what's happened is essentially this has taken national security concern. If the Chinese are using this distillation process of the OpenAI data to essentially mimic their larger models to create a smaller model. So I don't want to get into the technicalities of it because we'd be here all night or all morning. But essentially, there's going to be a lot of investigations into whether this process is a national security threat and whether the loopholes to get the potential chips from Nvidia need to be tightened further. And is it even possible to tighten it further?
Really fascinating, Steve. That question of whether or not the US can chase fast enough, can close those loopholes fast enough to keep up with how quickly AI is developing, particularly when it comes to this question of distillation and IP, essentially.
Yeah, and the chips aspect, too. Nvidia has made different chips. There's the H100, which has been banned. The H800, which is one that Nvidia brought out because of those original export controls. Then they sold them to China, but then the Biden administration closed that loophole. And then there's the H20 chip as well, which has now it's a less capable chip. So China's getting the chips. It's just a matter of whether these export controls are able to contain what was obviously with DeepSeek and surprised the market earlier this week with this R1 and version 3 of the R1. Essentially, it was just as capable or almost as capable as what America has created. So there's lots of questions. And with Singapore, you know, they've tightened the controls. After that original 40-something countries that were tightened to basically limit the intermediaries from channeling chips to China, they closed those loopholes, mostly, Middle East countries and also some in Southeast Asia, as I mentioned, not Singapore. But they closed it further, and that's where we have to really drill down and say, why are these chips going through Singapore? Did you know that 20% of NVIDIA's revenue, Singapore accounts for that? Singapore accounts for 20% of NVIDIA's revenue. They're not using 20% of NVIDIA's revenue, right? It's going on to other countries. I'm not saying it's going on to China. It could go on back to the United States, repackaged. It could go to Europe and other places. But it begs the question. Due to regulatory filings, most shipments, and I'll read it, most shipments associated with Singapore were to locations other than Singapore. Shipments to Singapore were insignificant. So it raises the question. I think Singapore is going to be really coming into focus going forward into this investigation, which nobody is saying is actually happening right now. But we've heard that Singapore has been in the crosshairs for quite some time.
Yeah, the unspoken is being spoken to. Mark, can I bring you in? And before, I guess, we talk about the FX angle to the tariff story, might be related to this. You know, Chinese equities, well, the cash markets are shut, but the contract where you are in Singapore is rallying quite substantially. What do you make of that move in the equity proxy?
Well, it's promising if you're bullish on Chinese equities, but do take into account the trading volumes are pretty small. There's not a whole lot of turnover going on today in that particular contract, so you can't read too much into it. Although I did see that last night some of the ETFs in Chinese names, they did pretty well on US markets last night on slightly better volume. So that may be as a good indicator that Monday will be a reasonable start for Hong Kong tech stocks anyway. But let's see. The weekend is a huge weekend, of course. Everybody is really concerned about how far the tariffs are going to go, if they're going to come at all. And obviously, we've already had currencies like the Canadian dollar, Mexican peso, have already been caught up in it. And you can see that the offshore yuan is quite a bit weaker this morning as well against the US dollar. And all the things that Stephen was saying there about the Nvidia chip story being very much in focus, that is not going to make the situation any better. I think as a trader, you look at that and you say, well, that's just another reason why tariffs are more likely to come in the near term than the long term, because with that whole mood of wanting to try and settle things on a trade basis between the United States and the rest of the world, stuff like the Nvidia fiasco is really just going to make it worse. So I think people are really expecting that something will come out over the weekend, and we're going to have a pretty volatile start to next week. It will favor the US dollar, and we're going to see Asian currencies in particular getting caught up in it. Korean won as well is suffering a bit on the back of what's happening to the yuan. So certainly going into the weekend, very few foreign exchange traders will go home short of the US dollar, possibly only against some havens. The yen and the Swiss franc are the obvious places where you might find haven trades. Otherwise, we can expect a pretty strong US dollar.
Yeah, Mark, just to pick up on that too. So 25% tariffs take effect tomorrow, and I believe that's across the board. I mean, I'm looking at some of Canada's exports to the U.S., everything from things like energy. To believe this, you go down the list, actually, you get to human hair, which is really one of the categories there, bird feathers. And I'm wondering, you know, supply chains, to Steve's point, are very complicated, right? As an FX trader, Mark, you mentioned this likely puts a floor, if not fuels the dollar even stronger. Do you think we test the recent highs on dollar index? Is that something to consider at this point?
It's hard to see the dollar not going back towards that kind of level, particularly when you've just had a Federal Reserve meeting where they held interest rates steady and they gave no indication of when they're going to budge from that scenario. It looks as though rates are going to be on hold for quite a while. The Fed needs more time to assess the inflation impact of new policies coming out of the White House and the tax implications as well. So you've got one side of the equation which is already supporting the US dollar anyway. US interest rates are not likely to go down much thanks to the Federal Reserve. So then it's the other side of the equation that really comes into the picture, and that's whether how far and how much tariffs come in to hurt these emerging market currencies and even the Canadian dollar. There is some talk that oil exports or the whole energy sector will be excluded, but then there's a lot of things up in the air in terms of the tariffs. But the idea that tariffs at all is obviously damaging. It will hurt currencies and help the US dollar.
Mark, to your point that the Fed is sort of still in wait-and-see mode when it comes to waiting for the impact of inflation and tariffs. We know that tariffs, 25% tariffs on Canada, Mexico, expected to come through on Saturday. China still, there's a little bit of a question mark over this. Let's just take a listen to what President Trump has said.
With China, I'm also thinking about something because they're sending fentanyl into our country, and because of that, they're causing us hundreds of thousands of deaths. So China is going to end up paying a tariff also for that, and we're in the process of doing that. Mr. President, we'll make that determination what it's going to be.
Mark, I'm just interested in how you think markets are going to recalibrate to this uncertainty over what we're actually expecting to see from the US, be it 10%, be it something more, when we start entering at least cash market trading next week?
Overall, it's obviously negative. I mean, if you see all these, the risk of tariffs being imposed, headlines continuously coming through, sometimes contradicting one another. We had one today where Donald Trump was reminding the BRIC countries that if they dare to replace the US dollar, he'd impose 100% tariffs on all the BRIC nations. So we're going from 5, 10, 25, up to 100% tariffs. Foreign exchange traders, they don't know which direction to jump at the moment. All they know is that they need to be ready at short notice to swing in one direction or the other, because there could be something there could be something concrete coming out of the United States. He could sign an executive order, and it's probably not going to be good for markets one way or the other. What percentage of tariffs comes is still up in the air, and apparently the discussions are going on. According to another Wall Street Journal report, there will be negotiations up to the 11th hour with various countries to try and avoid the maximum number of tariffs. Who knows what the final outcome is? But if you're a trader, you're going to be defensive. You are going to look for strategies that protect you in case the worst case scenario comes in. And at the same time, you're probably going to shy away from things that really depend on no tariffs at all. That kind of situation is probably just too complacent. Nobody's going to go into the weekend thinking we're going to come to Monday morning and it's going to be zero. So we're bound to get some pretty high volatility. And it's notorious. Early Monday morning, Asian markets are usually pretty thin. We could get some pretty big swings in currencies if there have been concrete measures put in over the weekend. So everyone come in early, please. Monday, it's going to be busy.
Okay, thanks, Mark. Our Chief North Asia correspondent, Stephen Engel there, as well as our Bloomberg MLive strategist, Mark Crampfield in Singapore, reminding us to come in very early on Monday morning. Still to come this hour, though, Nomura CIO Gareth Nicholson joins us to discuss their Asia market strategy. There's plenty more ahead. This is Bloomberg. Welcome back. You're watching The China Show. Now, for a recap of some of the big tech earnings reports this week out of the US, starting with Apple, which posted better than expected revenue despite a surprise drop in iPhone shipments. Sales in the Chinese market also fell 11% in its fiscal first quarter as it struggled to fend off competition from local brands.
Now, earlier in the week, Microsoft and shares there actually fell by the most since October after it reported lower than expected revenue in its intelligent cloud business. Now, that overshadowed revenue and profit that actually came in were actually both higher than expected.
Meanwhile, Meta shares extended gains after CEO Mark Zuckerberg said 2025 would be what he called a really big year for its artificial intelligence strategy. Revenue for its most recent quarter rose by more than 20%, beating estimates. The top end of its forecast for the current period was also higher than expected.
On the broader tech theme and the refreshed AI conversations that we've had this week, Beth Kindig joins us now, lead tech analyst at IO Fund. Beth, a pleasure to have you on the show. It's our first taste of what you coin as sovereign AI. How does that affect things?
Hi, David. Good to see you both again. When I look at what the situation going on with Apple, we have it down 11% in China. Tim Cook is pointing toward the regions where Apple Intelligence is available performed quite well. Regions where Apple Intelligence, that's the AI features, are not available are the areas and regions struggling, such as China. What that brings up is that this could be one of the early moments of sovereign AI. That means that countries deem their data, their AI, so important that everything, AI systems, AI applications, providers, all need to come from within the country. This idea that there will be a global, global tech companies that are in every region globally is going to be questioned as AI becomes more prominent due to that element of sovereign AI, which is that more and more countries are going to want to have sovereignty over their own data, sovereignty over their own AI, and we saw that tonight with Apple.
Beth, Rebecca here. I just want to pick up on your point about sovereign AI. We've obviously seen, plenty of restrictions coming in on the hardware side on these chips. In some ways, the emergence of DeepSeek has proved that workarounds, however they might have happened, are possible and, in fact, prompted by these kind of restrictions. To what extent are you expecting to see new restrictions, some of these sort of geopolitical considerations that you're speaking about, coming in when it comes to IP? I'm talking about, for example, the many comments that DeepSeek model has been built off these so-called AI distillations, has used learnings from, for example, OpenAI's ChatGPT to develop, rather than an innovative product, but what we might call a quote-unquote sort of best practice product.
The question between open source and closed source, even if we were to look at it simply from that element, to some extent, big tech is trying to keep their models proprietary, black box, closed source. This includes OpenAI. That does prevent the democratization of AI. And ultimately, the more development you have in AI, the bigger that AI gets, everyone can now use AI. It's on everyone's devices. There's a little bit of a bottleneck where these big tech companies need developers to really develop this economy, this AI app economy. But how can they do that if it's not open source? I think it's a great thing that DeepSeek chose the open source path. And in terms of restrictions, I think DeepSeek is sending, nodding in the direction that in order for there to be a vibrant development community, AI developers having that kind of access and making these breakthroughs, that it should be open source.
And the other notion that emerged this week, Beth, I want to get your thoughts on that too, is with what we know so far around, what DeepSeek made public, does that lead in general to lower AI spend in terms of CapEx, or is that too big of a conceptual leap to make at this point?
I think it's a very large conceptual leap to make. I think it's actually the exact opposite read-through. We want AI to leave the data center. We want AI to go to the enterprise, and we want AI to go to the edge. Edge meaning computers, mobile devices, things of that nature, even the network edge. Right now, if you can visualize that AI is basically stuck in data centers, to think that by driving down costs is going to prevent big tech from continuing to spend, I think is the wrong read-through. I think it will cause AI, big tech to spend more in order to make sure all of that development is happening in their stack. And then development will cause enterprise AI spend to go up, and then edge spend to go up as well. So I think that's the opposite read-through that I would have.
So is it correct to sort of think about this as a natural bifurcation of the market? So we have, on the one hand, perhaps closed source, predominantly closed source, cutting-edge technologies, high spend, and on the other hand, a cheaper, lower compute model. It's just an inevitable sort of diversification, bifurcation of the AI market?
I believe inevitable is a wonderful word. It's inevitable, and again, I'm going to go back to the thousands, hundreds of thousands, if you will, probably at this point, AI developers that need access to cheaper AI, cheaper models, faster models, in order to really develop this space. On one hand, Wall Street is complaining that there's not ROI on this big tech spend. They're complaining that there's not the next big consumer app. And then on the other hand, when DeepSeek brings to market something cheap that other developers, startups could use, they're now complaining that it's too cheap and that it will crash big tech's CapEx spend. I think all of that is a lot of noise. I think ultimately, whether it's the United States, China, whether you're a startup, an enterprise, or big tech, the way forward is AI, and more AI is a good thing.
Beth, if I can get your thoughts too, since you mentioned Apple at the start here, out with earnings, a reporter actually phrased it somewhat interestingly when we asked them about the key take from the Apple earnings call, where Apple seems to always have a reason for analysts on why why sales keep falling. Is that a good or a bad thing?
When you say that Apple has when you say that Apple has these reasons for softness in the iPhone, ultimately as an investor, what I want to hear is how do you expect to make up for the loss of China revenue? China is 20% of your revenue. How do you expect to make that up? I would want a more straightforward answer, because we know they have strong competition in China with premium smartphones. We know they're lacking those AI features right now. I would want to hear that piece, and I'm not hearing that piece from Tim Cook.
Beth Kindig there, lead tech analyst at IO Fund. Thank you so much for joining us. Stay with us. There'll be more on that story. This is Bloomberg.
Welcome back. Just in time here before we head into the lunch break for you to look at what looks to be, what is the best day for shares of NEC going back about 20, let's call it a quarter century here just to underscore that. Effectively, this is a boost to full year guidance, right? So we're looking at third quarter earnings beating estimates, and also the company boosting its guidance for adjusted profit moving forward. That tends to do what it's doing to the stock. On your screens, one market that's coming back online today after being shut for about a week is Korea, and this is really many sectors to watch in the AI story, given just the makeup of the market. Everything from chips, hardware, and in this case, specific case, AI power equipment are sinking substantially as the market, I guess, in some ways discounts the new information we have this week, playing down maybe the need for AI. But as our guest just earlier on pointed out, what we learned from DeepSeek this week is actually a good thing for broader markets in terms of wider adoption, and not the opposite. It might take some time for the markets to shake through and shake out many of these things. A look at broader markets. China's futures up 2%, and going into the next few minutes, we'll be speaking with Gareth Nicholson out of Nomura. He actually warned us about 6 weeks back that a potential Nvidia crash was one to watch this year. We'll get his take coming up soon. This is Bloomberg.
It's 11:29 a.m. in Tokyo. Japanese markets going on a break in a minute. Time for lunch soon. We are, well, really unchanged, I would say, on the Nikkei, just a touch higher.
Yeah. What would our colleague Sherian be having for lunch is my question. Anyway, she can tell me privately. I'm not sharing that in public right now. Well, I'm not really sharing anything. It's a question, right? What are you having for lunch today? All of you. Philosophical. All right. Asia, outside of Japan, is doing this. A lot of the move actually is down to what's happening in South Korea and the pull we're seeing right now. So when you look at IT, which is first row, top left, and some of your other big sector movers, so that's really a Korea story and a catch-down story. Also there should be some of the mining stocks are coming into the industrial space and the rally we're seeing over in Australia on the back of the metals rally that we're seeing. Okay, let's talk about these markets and what a week we've had, what we've learned so far in 2025. The crash of, 17% drop in Nvidia hasn't really gapped up and closed that massive drop that we had. So we did get a rebound the next day, but we have been sort of hovering just above the 120 level on shares of Nvidia. Let's bring in Gareth Nicholson, CIO and head of discretionary portfolio management at Nomura. And the reason I mentioned Nvidia, Gareth, and some of our viewers might remember our conversation back, I think it was mid-December. You guys put out that report looking at the potential gray swans, low probability, high impact events. And an Nvidia crash was actually at the very top of that. How do you feel right now about that?
Well, this move has happened probably quicker than we expected for most. I think, in general speaking, the amount of big numbers that were involved, the amount of focus on a small set, the concentration, the amount of resources and analysis going into just the small section of the space got the market too excited. We've seen the market too strong, too quickly, and it's inevitable that we're going to get some sort of correction. The market tends to overdo it, and this is what we're getting. And this is a healthy correction. I think your speaker before this was fantastic. She really highlighted that this inevitably is good for the AI. We will see rotation, we'll see strengthening of the market, and it makes us even more bullish, albeit we needed a bit of steam to come out of the system to build a stronger momentum forward.
Gareth, Rebecca here. I want to ask about some of these second-order effects here, not just Nvidia. If the market adjusts, that we can run these top-performing AI models for less, to what extent are we also expecting to see a recalibration down the line? So I'm thinking about the data center infrastructure, of course, all the sort of VC and so on, investor money that's going in, thinking about energy providers. When we think about that broader impact on the supply chain, have we already seen a recalibration in markets? Are you expecting to see more of that follow through?
Rebecca, totally. We think that there's a lot more, to be honest. And I'll use an analogy that I spoke to David about in the past, which I think is very apt. It's a bit like AI is a refrigerator today. Refrigerator in the 50s was a great invention, very innovative. But it was only when Coca-Cola came in and used the refrigerator to expand and to go global that we really saw the power of the technology. We're seeing that pivotal shift now. We're seeing that Sputnik event in AI, where we're going to see so much more adoption of AI. And this makes the space exciting because, to your point exactly, it's not just about huge data centers, huge energy positioning. It's about how we can move this technology throughout. Most of us are using it now daily, and I think this is just going to expand as we combine the AI intelligence with robotics, and it's a field that I think is just going to broaden and strengthen, and potentially could be, what we've been looking for, the next electricity. The internet was very revolutionary, but didn't really bring as much productivity as some thought it would. This could be very exciting, and it does make us feel constructive going forward.
Yeah, Gareth, I'll make sure when they clip that answer there, we'll make sure to clip the whole thing. when you mentioned the internet hasn't really been as productive. I think in context, obviously, in the context of, I guess, some of the expectations around AI. As it pertains to investment implications, and I'm wondering whether you think this leads to more flows into Chinese tech. We know about valuations have been very, very cheap there. And you think global investors should lower their bar into entertaining more exposure to China because of what we discovered this week?
Well, David, I think, to me, one of the even really compelling was just to see these celebrations of human dancers with robotic dancers that, also made the internet throughout. Just that cultural take on using and integrating technology is so strong in China. It is such an integral part of the environment. I think just highlights that there's going to be a lot more innovation. We had Alibaba come out with a great new model. There's a number of other models that are interesting alongside DeepSeek. I think the technological shift is just really starting, and we're going to get some great competition, which is great for the overall industry. And a lot of it is going to come out of China. So for us, we have been tactical China for some time because we felt that we haven't seen enough Chinese buy China. We talk about this idea of sticky money. When India started buying India on every dip, that created a lot of forward momentum for big investors to move back in. We haven't really seen that China buy China on the dips as much, but that is changing a bit. The support from the government is creating that floor. It is building in some momentum, and that is going to be the shift from people seeing China as a tactical trade to once again a more of an asset allocation and building that position up. There's still some space to go. The economy still has to catch more traction, but this is great signs for Asia, for China, driven through one of the strongest growing sectors at the moment, which is tech.
Gareth, I want to just switch gears here slightly and think about the US and think about the Fed. Of course, we saw that pause. We're somewhat in wait and see. We're on the eve of seeing these tariffs from the US on Mexico and Canada. We don't know if we're going to see what we're going to see on China. Tell me, what are you expecting from the Fed in 2025? And to what extent are the Fed able to actually move while we wait to really understand what the tariff implications are going to be for that inflation number?
Well, Rebecca, firstly, I think we should give credit to where it's due. The Fed has, I believe, done a pretty good job at managing through COVID, managing through the inflation spike, managing through quite a lot of uncertainty over the current chairman's session. I think what they're doing now is very prudent. It's very much a pause. It's very much, let's see what traction these tariffs bring in. We're at a level that is not affecting the growth of the U.S. materially. There is some cracks forming, but not dangerous. We believe, we still think the U.S. economy is holding up well. So by pausing, and we think most of the year we're going to see a pause from the Fed. Maybe one rate cut. This gives them that optionality to be able to react, to be able to see where the potential pain points will come from change in policy, be it tariffs, be it the labor markets. And I think this is a pretty strong move, definitely compared to other economies, maybe like Europe, which are forced into cutting, where they need to stimulate growth, where there is a definite need not to sit and wait. The Fed is in a better position. And that stability, I think, will bring some confidence to the market as well.
Yeah, the fifth cut in the cycle out of the ECB this week too, Gareth. What other strong convictions do you have at the moment as we sort of get geared up for the year?
Well, we talk quite constructive about US and China. I still think a lot of portfolios are massively overweight the US exceptionalism. I think it's going to be a volatile period. There's a lot of uncertainty coming through from geopolitics, from domestic politics, from changes. And it does make sense for us to see portfolios shift from a huge concentration to a bit more diversified. Now, that's rotation within the US. There's also rotation out of the US into places like Japan. I think India is slowly starting to turn. We also like other sectors which are going to be interesting around defense, around resilience energy. These are spaces which you're seeing different domestic areas really focusing on. You're seeing Indonesia coming into a nice play within Southeast Asia. So there is a case to start moving out, and also into different kind of asset classes. Private equity secondaries is something very interesting, and private credit. So this is really a market about being active. It's not really an environment where you just want to sit and wait. I think there's a lot of space to build resilient income, more predictable income, and that is what we're seeing a lot of our clients already starting to do. So we just started 2025, but lots to keep us busy.
Lots to keep us busy indeed. Gareth Nicholson, CIO and Head of Discretionary Portfolio Management there. Stay with us, there's plenty more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. DeepSeek's latest AI chatbot has challenged some established assumptions about the cost of developing AI technology. Our team at Bloomberg Originals has been taking a closer look.
January 27th, 2025 may go down in history as DeepSeek Day.
DeepSeek shaking up global tech.
Nvidia losing nearly $600 billion in market cap today alone.
A handful of other US chip stocks, many trading at 30 times earnings or more, plummeted as well. They dragged down the S&P 500 and the Nasdaq 100.
The entire stock market has been really hinging on this AI supply chain. And what DeepSeek threw into question is whether or not that supply chain really needs to be built out as much as the companies have projected.
DeepSeek makes an app similar to ChatGPT or Claude. It'll write code, answer questions, or script an empathetic breakup text.
It quickly surged to the top of the App Store and it surpassed OpenAI's ChatGPT.
And what's extraordinary is its apparent quality and low cost. And, of course, its seeming appearance out of nowhere.
DeepSeek revealed it was able to build this model and train it at just a fraction of the cost.
In fact, it ranks among the top performers on a UC Berkeley-affiliated leaderboard called Chatbot Arena. But it's also open source. Developers can inspect the code, modify it, and run it on their own servers, even for commercial use.
The release of DeepSeek AI from a Chinese company should be a wake-up call.
Washington, for a number of years now, has been restricting China's access to cutting-edge chips, which they thought would hold it back significantly in the AI sector.
DeepSeek's focus on efficiency rather than funding meant it could engineer itself into a competitive position, even if it was standing on the shoulders of giants.
There are a lot of people now in Silicon Valley trying to decipher how exactly DeepSeek was able to build this model, whether it used technology from other companies, and whether it used more chips than it's let on.
I don't think there's a clear answer to that yet, but I do think they have shown, in the research that DeepSeek has published, that they have been able to, come up with their own innovations here, and they have been able to really be efficient with the technology that they do have.
This is a bit of a wake-up call for the AI industry.
And subscribers can watch that report in full on the terminal and Bloomberg.com. And it'll be available later on the Bloomberg Originals YouTube channel. Now, for more on the developments in Chinese AI, let's go to Bloomberg Intelligence senior analyst Robert Lee. Tell us, what have we learned, not just this week, but in fact, let's remember, DeepSeek launched the day of Trump's inauguration. So we've had a couple of weeks, actually, to sort of let things percolate.
No, that's true. And just a quick plug, following the plug for Bloomberg Originals, you can go on the terminal and find our extensive deep dive on China's AI sector, which talked about DeepSeek back in November last year. And we've been covering the company for 7 months or so. So I think taking a step back from all the headlines, all the noise and everything else this week, it sort of reaffirms the view that actually China has world-beating expertise in cost down. However, I suppose if you're going to criticize the Chinese technology industry historically, there's a lot of copycatting. They'll take something that exists, put out a cheaper version. Historically, I think that's true. But I think not just based on our opinion, but you've seen some very senior people in the US tech sector come out and actually praise their model. It is genuinely innovative. So cost down is a major driver within the technology industry. It's absolutely essential to, underpinning future profit projections. But as I've said numerous times, the big challenge and the big question for this industry is monetization. And I would argue that DeepSeek doesn't really change the monetization outlook for the sector. The average consumer is not putting their hand in the pocket at the moment. They don't see sufficient value add in the current generation of models. We've all played around with them. But the level of monetization coming through, both in China and the rest of the world, is not sufficiently high to justify the extraordinary levels of capex investment that are being put in at the moment. And sorry, this is a bit of a long spiel. I would also say, particularly in China, the large language model sector is commoditized. You know, maybe I've skirted around the issue. It's in our research. It is commoditized. There's low technical barriers to entry. There's a low level of product differentiation. There is low pricing power, which is why the majority of these tools are available for free. So again, this is not to take anything away from DeepSeek. They've been truly innovative, and again, you know, China's got inherent strengths in software development. But how are they going to make money? Not just DeepSeek, but the rest of the industry. It's a long way off. And again, I think that's the key issue that really people need to focus on. Where's the return on investment? Just to pull one figure for you, not picking on Microsoft here, but if you may remember their results a couple of days ago, their Azure business, the cloud computing business, these were really strong numbers, really healthy backlog. I mean, you know, very, very encouraging, driven by AI demand for their cloud computing services as people are developing these models. But Microsoft spent something like $22 billion in capex in the last quarter that they've just reported. The AI portion of sales on Azure was $3 billion. $3 billion is a nice amount of money, but, you know, that's revenue. What about the profit? So I think, you know, things are beginning to move in the right direction, but the monetization within this industry remains at a very early premature stage, and particularly in China, given the cutthroat competition. One other stat for you, if you look at the chatbots available in China at the moment, dominated by Baidu's ErnieBot, those bots in aggregate, so including ErnieBot, generated less than $1 million revenue last year.
Wow, okay. So let's even throw in Moonshot, for example, Alibaba as well. I mean, you bring up a very good point. I'm wondering what you think about this. So the economics don't look, and I'm the card-carrying idiot here, just to say, but the economics don't look correct. Like, if you're throwing billions in capex into a product, at least in one part of the world that's become commoditized, that doesn't seem to be a cost curve that is in favor of profitability anytime soon. The typical path is, you know, something that starts very expensive, like solar panels, and then it becomes commoditized as well. This seems to be going the opposite way, or am I just looking at the premise wrong?
Okay, I guess my comments are more focused on these large language models and chatbots, whatever. I would guess, you know, if we had someone with a counter view sitting next to me here, they would argue, well, you know, probably wouldn't disagree so strongly. I mean, the evidence, the facts are there to back up what I've just said. But they'd say, well, it's all about the AI apps. You know, it's about the apps that are using these models, incorporating AI functionality. This is where the real money opportunity is. Or is it? Again, within our deep dive, we looked at, I think, a range of 4 apps that are AI enhanced coming from Chinese vendors. We looked at the growth rates pre the AI enhancement and afterwards. The growth rates actually reduced. Now, okay, we know about the economic headwinds in China. That is a factor. We know it's a cutthroat competition, as I mentioned. But given the extreme positivity surrounding this industry, the really positive sentiment, you would expect those growth rates to accelerate, wouldn't you? Even in a more challenging economic environment. They're not. So I think, again, that reflects the general level of disinterest, skepticism from consumers. They don't see sufficient value add at the moment. And this comes back to a more fundamental question about, is AI really intelligent? It superficially gives the impression of being intelligent, but again, as discussed in our deep dive report, the basis of all AI as we see it at the moment is pattern recognition. There's a very powerful technique that, you know, can drive cost and efficiency savings in some application, but I would argue, and there are others out there in the industry that would agree, or do agree, it's not truly intelligent. Whilst DeepSeek's latest model does have some basic capabilities in reasoning, it cannot reason in the same way that a human can. It cannot think for itself. So, for example, you ask any of these models a question outside the data they've been trained on, they just can't answer it. They can't blue sky think. Again, I'm not taking anything away from them. They have, they can add value in certain applications, you know, in pharmaceutical research, in scanning an X-ray image to detect the signs of early cancer. They're able to do it more quickly and more accurately than a human being can. However, these are useful techniques that have got real-world applications. But, again, Rise in the Machines, all this stuff, that belongs to Terminator films, etc. I think we are still at a very early stage of development in this industry. These things lack true intelligence based on, and I think the monetization struggle is going to remain with the industry, particularly in China, for the next few years. So I do not see this as a catalyst for earnings in the Chinese companies. I think they will continue to struggle, and therefore, it will remain loss-making in aggregate looking at the China industry. It's for my colleagues elsewhere to comment on the impact on the stocks and companies they cover.
Okay, January 31, 2025, just to put the timestamp there, audio, in case this clip gets cut up and looked at further into the future and we get proven wrong. There we go. Robert Lee, of course, it is early days here. Robert Lee, our senior analyst, Bloomberg Intelligence. Plenty more ahead. This is Bloomberg. All right, welcome back. Just to look at some sector movers across the region today. We have a lot of markets still shut, of course, mainland China, Hong Kong, Taiwan, and Vietnam. Oz miners have been on the up, although, as you can see, we're coming off highs a little bit right now in some of these big names. In case you missed it, there's been a rally taking place across some of the metals and commodities there. So like things like iron ore and gold have been doing exceptionally well in recent days. Watch that closely. Within the region, one market that is coming back online today is South Korea, and quite a surprise shocker to the downside here, given the catch down we're seeing there, and of course some of the big names that are tied to the AI story, including the earnings story, by the way, out of Samsung. SK Hynix is really your iteration of that main one, at least, down about 1% over in Seoul. But yeah, I mean, it's quite a week we've had here.
Yeah, I mean, the really big story here on whether or not the US and its allies, South Korea, and all the sort of companies that support that infrastructure when it comes to AI can compete with China. It's become a really dominant part of the conversation. It was sort of in the backdrop in some ways last year. You didn't have company execs, particularly in the US, being as vocal. It does seem now in the Trump era, got a lot more comments coming through from the likes of Anthropic CEO, OpenAI, and the what.
And I think you're right. They sit on both sides of the fence. Either it's a hawk on China, or someone that acknowledges at least that, the one that DeepSeek actually put out had some merit to it, and it's good for the overall industry. We're up 2% on A50 futures. Thank you for joining us today. We'll see you all on Monday.